if you're going to retool, from our perspective, it adds value because you're getting a bump in the revenue. Generally speaking, we've seen that we estimate on our projections that it can grow the income 10 to 15%. And then you're also getting a reduction in the utilities, reduction potentially in the maintenance and repairs, depending on how much you've had to service your equipment. So that all flows to the bottom line, which in turn adds value to the location.
Welcome to the PlanetLaundry Podcast. In this edition of the podcast, we chat with Jennifer Whitney, Vice President of Business Development for Eastern Funding, a top laundry industry lender headquartered in New York City. In this episode, Jennifer discusses some of the trends she's noticed in the financing segment of the industry, how to go about valuing a laundromat, the ins and outs of the SBA's 504 loan program, mistakes to avoid when seeking financing, and much more. The PlanetLaundry Podcast is brought to you by Planet Laundry, the magazine of the Coin Laundry Association. This is the Planet Laundry Podcast. I'm your host and the editor of Planet Laundry Magazine, Bob Nieman. Today I'm with Jennifer Whitney, the Vice President of Business Development for Eastern Funding, one of the leading lenders in the industry. Jennifer's been involved in the laundry business for 25 years. And during that time, she's worked with those who have been involved in practically every type of laundromat project imaginable. During her years in the business, Jennifer's been a speaker at industry events, an author in Planet Laundry Magazine, and a LaundryCares volunteer. In addition, she's currently on the task force for CLA's Women's Laundry Network, and she sits on a committee to develop a mentorship program for women in the industry. And if that's not enough, she was recently appointed to the CLA's board of directors. Hey, Jennifer, thanks for being here today. I appreciate it.
Good morning, Bob. Thanks for having me. I appreciate it.
You are a busy person.
Well, always have time for the CLA.
Well, listen, congratulations on being appointed to the board of directors. What got you interested in serving on the board for the CLA?
I think my interest started when LaundryCares became more popular and more of a talking point amongst store owners and industry leaders, really. I volunteered at a few events and really liked that it was becoming more community focused, the laundry industry, versus just about laundry equipment, which is where I started. So that's where it started. And then it kind of evolved because the excellence events were a really great supplement to what the Coin Laundry Association was doing with the Clean Show. And I liked that it was more personal. It was smaller scale. And then the women in laundry portion of it was added last year, which is kind of important to me as a woman in the industry to make sure that we're growing and developing the younger women and the existing store owners that are women that may not have the resources that they need.
Yeah, no, absolutely. Well, what are some of your goals for your tenure on the board? What specifically would you like to help the association, I guess, accomplish going forward?
I think to start, I'm really in the learning mode right now, learning about all of the different committees that the CLA has and what the value add is, so we can take that and grow the membership, take it to people that may not be aware of everything that the Coin Laundry Association offers. I think that that's really important right now with so much access now for store owners on social media platforms. Sometimes there's a lot of information out there, but it may not be the best information. And for as far as getting into the laundry as an investment.
Right. No, absolutely. Great points. Well, interestingly, I mean, your career has not always been in the laundry business. You started out, it's always been in financing and banking, but not always in laundry. How did laundry eventually find its way into the picture, and when did that happen?
Yeah, when I moved to Wisconsin, actually. I was working at Bank One when it was Bank
Mhm.
One prior to it being bought out by Chase.
Mhm.
And I always say that laundry kind of found me because I was a credit analyst. I was really the grunt person at Bank One and working 12-hour days. And I really wanted to be in front of customers versus behind the scenes.
Mhm.
So I worked with a recruiter, and just happened that one of the equipment manufacturers was looking for somebody to join their finance team. And I joined in 1998 with the manufacturer and kind of worked on the collection side of things. So I learned all of the ways that people try to avoid paying their bills and what to look for to show that a location may not be a good investment or investor may not be a good fit for the industry. So
Mhm.
I think it was a good start for me in this industry to learn specifics that I
Mhm.
may not have learned just through a bank.
Right, right. Well, beyond that, what other things maybe attracted you to the laundromat business or the laundry industry?
I think it's, laundry back then in the late 90s,
Mhm.
I think, coming out of college, it kind of got a bad rap.
Mhm.
You look at stores and they may not be in the best condition, but it's a necessity. You have to go
Mhm.
and do your laundry. So I liked the idea of it being a niche and learning very specifically about how we can help customers get into business for themselves. And that was really important to me. I really love the small business owner.
Mhm.
Um, and it was rewarding to, when I first started, to help people that were struggling work their way out of it and maybe add their second or their third store.
Right, right. Absolutely. Well, you bring up a great point. It's back in the 90s, it was very much a different type of business, wasn't it?
Mhm. Mhm.
And I guess maybe from your unique perspective as from the financing segment, how has the industry changed? How has it evolved since the time when you first got into it and since you've been in it through the years?
Right. I think technology plays a big part in it, especially
Mhm.
with the equipment. I think from a
Yeah.
manufacturer's point of view, because I started there, I learned more about how, research and development and changes in the machines was such an important aspect of the industry. So, behind the scenes, everybody was working to find new ways to make the equipment more efficient, more technological advances, and how do you help people become multi-store owners versus single store operators, which was
Mhm.
really more popular in the late 90s, just one store owners. Now, as the industry has evolved and people have learned more about how to scale the business, they're adding
Mhm.
locations and becoming um, more remote operators because of the technology available to them.
Mhm. Mhm. Right. No, I think that's absolutely correct. What about trends? What trends are you noticing, especially recently in your segment of the industry? Is there anything that's kind of taking hold in the
I
last few
think
years?
I think that since COVID, we've seen an influx of people who are interested in
Mhm.
the laundry industry
Mhm.
and do a lot more research. So a lot of people are out there looking for ways to own their own business, be self-employed. And so the trend has been more towards acquisitions of existing stores
Mhm.
versus building and financing a new project, because all segments of the project costs have increased over the
Mhm.
last few years. Construction, equipment, financing, pricing has all increased. So people are looking for a way to get into the business without spending a
Mhm.
significant amount of money.
Mhm. No, absolutely, and certainly speaking to that trend. Um, for someone who's looking to acquire an existing store, what does that due diligence process look like? What kind of questions should potential buyers be asking? What type of information should they be gathering to help themselves out?
Sure. I think the most important, there are a few pieces that we, from a lender's perspective, look at.
Mhm.
Um, Obviously, the financials on the store, you want the seller to have really good records. So
Mhm.
as you're doing your research, make sure that you're talking to sellers about their financial records. Do they have system reports? Because with the card systems that are in the market now, that's allowing a lot of sellers to maintain better records
Mhm.
than 10 or 20 years ago. So financial records for sure.
Mhm.
A strong lease is very important.
Mhm.
Do they have to negotiate a new lease? Do they need to get extensions on the existing lease?
Mhm.
And the equipment, what condition is the equipment in?
Mhm.
How much has it been repaired? How old is it? Can you get
Mhm.
an equipment condition report on it? Because those three pieces alone will help guide us in determining how much financing we can provide for the location.
Mhm.
And then that in turn tells the investor how much cash they need to bring to the table.
Mhm.
So if they don't
Mhm.
have a location in mind right now while they're doing the research, make sure that they're saving money, building up their cash reserves, and doing as much due diligence on the location as possible.
Well, when you talk about the lease, how much length of a lease are you would be preferable? What are you looking for as far as length?
Well, if it's a new store project, we really tell investors to get an initial base term of 10 years with
Mhm.
additional options.
Okay.
Typically, what we've seen is investors can get a 10-year base term, then get additional 5-year renewal options.
Mhm.
Sometimes we'll see a 5-year base with multiple 5-year options.
Mhm.
So that's really important from a new store perspective. From an acquisition of an existing store, we need to have a lease term that is at least 1 year longer than the loan term that we're providing. With that said, if they know that they're going to have to replace equipment, it's better to negotiate the renewal options up front, knowing
Mhm.
that they're going to need to replace equipment and are going to need to have a longer loan term in order to do so. So as much as you can negotiate on the front end before you sign that lease initially, the
Mhm.
better.
Okay, very good. Well, and again, with equipment, what specifically are they looking for? Age of the machine, models, I what what type of what tips can you give a buyer on that as far as how should they be looking into the machines to pass that along to you?
As far as from an acquisition of an
From
existing
an
store,
yes, from an acquisition, correct.
I think that we want to know the size of the machines, the
Hmm.
age of the equipment. If you can
Hmm.
get serial numbers, that's great. And
Okay.
like I said, it's important to try to ask for service reports. How
Okay.
often has the equipment been maintained?
Hmm.
What has been done to the equipment? Bearings,
Hmm.
just replacing a few miscellaneous parts here and there,
Hmm.
to determine whether or not it's had significant repairs needed, and has that been consistent over the life of the ownership?
Hmm.
Because that may determine how much you want to offer for that
Hmm.
business, knowing
Okay.
that you might have to replace it in 3 years versus in 7 years.
Hmm. Very good. Well, how would you suggest a potential buyer go about valuing a laundry business that's for sale? And maybe that's just a different way of asking what I just asked, but how do you go about that valuation process of a business for sale?
The valuation from a lender's perspective is really
Hmm.
based on the financials,
Hmm.
the
Hmm.
the the lease and the age of the equipment. Those three pieces help us
Okay.
determine what multiple of annual cash flow from operations we'll use to value a store.
Hmm.
So, depending on who you talk to, some finance companies will value a store based on just the value of the equipment,
Hmm.
where we value the stores based on the value of the cash flow, because Eastern Funding
Hmm.
is more of a niche lender. So
Hmm.
that's where we come from,
Hmm.
that perspective.
Hmm. Okay. All right. You had mentioned the trend in retooling. I mean, it's certainly the last several years, certainly through COVID, it's gotten big. What are some advantages of a store retool? I guess both from the valuation standpoint, as well as the financing standpoint.
From a valuation perspective, as well as
Mhm,
from a lender's perspective, really,
mhm, mhm,
if I'm looking at a store that has 10-year-old or older equipment, I may value that location at a 3 or a 4 multiple of EBITDA, or even a 2 multiple of EBITDA, depending on how old the equipment is.
mhm,
Um, if you're going to retool, from our perspective, it adds value because you're getting a bump in the revenue.
mhm,
Generally speaking, we've seen that we estimate on our projections that it can grow the income 10 to 15%. And then you're also getting a reduction in the utilities, reduction potentially in the maintenance and repairs, depending on
mhm,
how much you've had to service your equipment.
mhm.
So that all flows to the bottom line, which in turn adds value to the location. So a store that maybe we would have valued at a 2 multiple with 10-year-old equipment, that may go to a 4 multiple with brand new equipment. So
Right, right.
there's a significant value to adding new equipment. And typically the bump up in revenue and the decrease in expenses will pay for the monthly payment on the equipment if you need financing. So it all comes down to running the numbers.
Right, and it all kind of works hand in hand, doesn't it?
Mhm. Right. Yes,
Mhm,
it does.
mhm, mhm. Very good. Well, I know a few years ago you wrote a great article for Planet Laundry on kind of explaining the 504 loan program, which is a program by the SBA. Can we
Mhm.
talk a little bit about that and what exactly that 504 program is?
Sure. The
Hmm.
SB 504 program is for a store owner who is looking to buy a piece of land or buy an existing property and develop it into a laundromat.
Hmm.
And it is a great way for a third-party lender to partner with a local SBA office in the market where the store is being developed,
Hmm.
where they share the financing duties.
Hmm.
So, so we can finance more of the project and spread it
Hmm.
out for a longer period of time, which
Hmm.
is great for the cash flow of a laundromat. And it allows the investor to own the real estate, which is a big plus versus having to deal with a landlord and negotiating a lease and renewal options. So
Hmm.
it's a more paperwork intensive process,
Hmm.
and it takes about, I would say on average, about 3 months to go through the approval process. But again,
Okay.
the benefit is a lower cash investment. Typically,
Hmm.
it's 10 to 15%.
Hmm.
If you're an existing laundry owner versus a new laundry owner. Um,
Okay.
and you can spread out the financing over a longer period of time. So for some lenders, the maximum term is usually 10 years, fully
Hmm.
amortizing. With the
Hmm.
SBA 504 program, you can get a 15-year amortization or 20 or 25-year. It just depends on the project and the
Hmm.
local office that we're working with.
Okay. So certainly it could be a good fit for a lot of laundry owners in certain cases. Some eligibility requirements there, but a lot of advantages, it sounds like.
Definitely a lot of advantages,
Hmm.
and it gets people owning the real estate, which I think is
Hmm.
really important right now,
Hmm.
to investors, new investors coming into the industry, as well as existing store owners. It gives them another option
Hmm.
versus going to a local bank who may not
Hmm.
be able to finance the
Hmm.
entire project. They would only look at the mortgage. This
Hmm.
program allows it to be a one-stop shop. You can work with a third-party lender and the SBA, but it's
Hmm.
all wrapped up into one project.
Right, right. Very interesting. Okay. Well, I mean, overall, Jennifer, how many laundromat loans do you do annually?
As far as
Uh,
originations, we're
mhm.
in the hundreds.
Okay.
Um, I would say about 300 to 400 that we fund. But
Okay.
on a daily basis, the number
Hmm.
of calls that we get for leads and reviewing financials,
Hmm.
multiple leads in the week. So
Hmm.
there's a lot of interest in the industry right now, a significant demand, but maybe not a lot of supply of existing
Hmm.
stores or
Right.
existing real estate to buy to develop a new laundromat.
Okay. Okay. Do you do a lot of 504s that we had just spoken of? Have you done a lot of those loans?
The interest increased significantly after COVID with the extension of the CARES Act. That kind
Hmm.
of brought the SBA 504 program to light. So I would say that we do probably about 5% of our loans
Okay.
are looking at 504s now.
Hmm.
Um, they're bigger projects. They take a lot more time. So people have to be really committed and dedicated to it to move forward with the program. But it is a great opportunity for
Right.
laundry investors. Mhm.
Right. Very good. Well, what are some best practices for laundry owners or potential investors who are looking at acquiring funding? I mean, how should they prepare before they come to you? What are some tips and strategies for them?
I think like I mentioned with the 504
Hmm.
program,
Hmm.
paperwork is key. It's a
Hmm.
necessary evil, unfortunately. And when you're looking for funding for a large new store project or even an acquisition of a store, we need to see your paperwork. Proof of
Hmm.
cash investment is really important.
Right.
Um, your credit application, your personal financial statement. So making sure that you have statements to validate the information that you're providing in the paperwork
Hmm.
and doing your research, because I think that what's sometimes lost is a business plan. The laundromat doesn't necessarily run itself. And
Hmm.
and with the evolution of the laundromat into wash, dry, fold, pickup and delivery, you have to have a business plan. How are you going to market? Who are you going to hire? How are
Hmm.
you going to handle pickup and delivery? Just the logistics of everything.
Hmm.
So knowing what your business plan is and putting together each of those segments, because those are the questions we're going to ask.
Right.
Especially of a new investor coming into the industry, we want to know that you've done your research on
Hmm.
the competition,
Hmm.
on what the competition is offering, and how you're
Right.
going to stack up against the competition with your business plan.
Hmm. Hmm. Excellent points. I guess by contrast, what are some common mistakes that you see? What are some pitfalls that potential borrowers need to avoid? Things that you come across regularly that could really kill their their deal.
Yeah, from a financing perspective, I think
Mhm.
that it's the cash the cash reserves and the cash investment.
Okay.
Um, Knowing how much cash is needed to get started, even if you're just buying an existing store. So you have
Mhm.
to have reserves in the event that the water heater goes down or
Mhm.
that there are parts that are needed for equipment that goes down,
Mhm.
or there's ancillary equipment that needs to be purchased. So cash reserves right now in this climate is really important, and I think that sometimes people go into this industry thinking that it is just going to run itself. So it's cash reserves and time. Your
Mhm.
time is important to
Mhm.
invest in the business to make
Right.
sure you're getting the return on your investment.
Right.
So that's a really important aspect to remember.
Yes. No, those are two great points. Hey, at the outset here, we talked about how you're involved with the Women's Laundry Network and the mentorship program that you're developing for women professionals. What advice would you give other women who are looking to get into this business or this industry, either as a store owner or with a manufacturer or with a distributor? Just what advice do you have for women out there who are looking to do this?
Yeah, I think my first piece of advice would be do your research,
Hmm.
educate yourself, on every aspect of it. Don't be afraid to learn about service on the equipment, how the equipment works. I think that was one thing that maybe I didn't spend enough time on early on in my career, is understanding the equipment side of things and being able to talk in those conversations with people who were industry experts. That's my first advice, is do your research and educate yourself. And then secondly, it's really to be a leader and don't be afraid to voice your opinion and voice your thoughts, because as we've already discussed, this is an evolving industry. It hasn't stayed the same since I started, and it's not going to stay the same in the next 20 years. So there's a lot that new minds and fresh minds can bring to the table. So don't be afraid to stand up and voice your opinion and your thought.
No, that's great. Last question for you, and I really appreciate your time, Jennifer. What does the financial picture for the laundromat business look like down the road in the coming months and maybe the next few years?
I think that's the $1 million question, right? Right now, I think everybody's wondering what's going to happen with interest rates and everything. But generally speaking, in the industry, I think that we're seeing more of a trend towards acquiring existing stores and retooling them, remodeling locations versus building new. Until we see some of the costs going down in certain areas, I think new stores might be a little bit more on the back burner for the time being. So, and I think that we're still going to see more efficiencies, more technology, and more people trying to incorporate pickup and delivery and wash, dry, fold into their laundromat locations, and figuring out exactly how that's going to happen. A lot of people are talking about scalability and growth right now as well. A lot of bigger investors might be coming to the table and, wanting to invest in the laundry industry and buying up, multiple locations at a time versus one at a time growth. So, it remains to be seen if that's an effective way to get into the industry and stay in the industry for a long term versus just getting in, buying and flipping and making your money and getting out. So I don't know. I go back and forth with that type of investor, but yeah, we're seeing more and more information about different levels of investors coming into the industry.
Right. We're certainly seeing all kinds, and it's evolving, as you said. So I guess stay tuned, right? And we'll see what happens.
Exactly.
This has been a pleasure, and I always learn something. So thank you so much for your time today.
Okay, you're welcome. You're welcome. You have a great day, and thanks again for having me.
Absolutely. Thanks for joining us on our podcast today. If you haven't done so already, please be sure to subscribe to Planet Laundry at PlanetLaundry.com. And don't forget to follow us on social media at Facebook, Twitter, LinkedIn, and YouTube.